Good evening, traders. I'd like to welcome you here to our market recap of the E-minis of the ES 144 tick. It's for the opening of the market on Sunday afternoon USA, 9 a.m. Australian time, Southeast Asia. And of course on Tuesday, or sorry, Monday I should say, tomorrow we've got Martin Luther King holiday. So we expect, and we had lower volume as lots of traders of course are taking the market off, but we still had some good trade opportunities because in the USA and Australia we've got a lot of day traders trading the ES market because of the volume and the great trading opportunities. So let's have a quick recap some of the trades we had here at the open, and let me just put the icon back on. Here we go. Down here we can see we had a T19, a divergence trade set up here. Now this is the first hour of trading. A lot of traders like to sit out that first hour and wait for market direction to identify itself, which isn't a bad strategy. But we can see here we're above the zero line on the platinum. We also had a T69 breakout. We had what we call a T98, which is a cross of our zero lag and our trigger line, which I'm about to remove so I don't confuse traders. And so we had a great trading opportunity, and as per usual, and I put this in live, I was training someone at the time, target upper pivot. So it was only 2 points in that particular move between pivot to pivot, and likewise once we broke the pivot there was a similar sort of trading opportunity. Now the other thing, looking at the chart here, we have, it looks very busy. We've got the zero lag, we've got our channel, we've got the trigger line, we've got the 89, we've got our platinum, we've got the long-term and short-term stochastics. Well, what you do of course is you strip the chart back to the indicator or to the setup that you're actually trading. Now here what I've done is marked up half of our 12 different types of trading opportunities that we have. As you hear me talk about every single recording and every training session, become a specialist, become a master at one particular setup. The number one setup you can master to begin with is the T1 setup with the trend, T1 with the trend, and the second one, which I personally love, is the T89 because it's so visual and it kicks butt day in day out. So let's get back here. So we had a T69 with a T98, which is the cross of our trigger line. Now the cross of a trigger line, this blue line, and the zero lag, generally speaking, triggers a new trend direction. It's a great trading opportunity for experienced traders. So I'm going to remove this now so we don't confuse today's session. So let me just disable that, and if we go up here we can see at this particular point no trade. Now we had a severe thunderstorm here last night, so I turned my computer off, and what's happened here is what hasn't reprinted was one of our white candles that hasn't plotted here again, and so this actually had one here and it formed a T89. Now the reason you wouldn't have taken this T89, in actual fact I had question mark there, it wasn't a T89, was because you need the zero lag to turn down and to change color, which it should have done on this candle, which it didn't, which meant there was no T89 trade, and it happened to save you, keep you out of a losing trade. Until we get up here we have our paint candle plot. Now remember, that does not plot until you get a tick below the second candle. So your entry was on this candle and bang, thank you very much, away it went. And of course you had a T69 trade there as well. Now here you had a T2, which is a slingshot. Your long-term stochastic is oversold, your short-term comes down, formed a slingshot, and bang, up it goes. Now all of these are forming great 2-3 point moves. There was some fantastic action in yesterday's market. So let's, whoops a daisy, let me just go back here and let's get back here. Here we had a T25. Now T25, as a reminder, is we have a 2 to 5 candle pullback and a reversal, and you actually had your zero lag did confirm, and you would have taken that short right there. Now here, and I'm missing this particular trade here, you actually had an 89B, which is an 89 bounce, and 89 bounces is a trade you take once you've mastered your T1. You take every day of a week. That was good for 5 ticks. Your 89 bounces where you're bouncing off the 89 EMA with the confirmation of your T1 signal and of course the zero lag. Then we had the T25. Let me not race ahead too fast. Now on your stop, I always use a 2-tick stop above or below your closest swing point unless your stop is too large. If your stop's too big, stand aside. It's not worth taking the trade, as time and time again you'll see where you've got an extra large stop. The market's had a quick run, then it will reverse and come back down. So if your stop's too large, stand aside. There's another train just around the corner, another boss on the way. There's trades left, right and center as we can see here. Then we had a T1. If you're following my advice, you're trading T1s only, you would have been in this particular trade here. And look at this, this is a beautiful T1. And by the way, you stop here being above 2 ticks, you weren't stopped out of that trade. Okay, you're okay if you're 2 ticks. Likewise on the Nasdaq, we're 133, which I trade during market hours. Always my stops 2 ticks above or below the swing high. 225, once again 2 to 5 candle pullback. My entry is just outside the candle. Bang, thank you very much. I then had a T89. Look at that angulation. So the market fell dramatically. I'm waiting for my zero leg to turn, which is here. My entry was there. That was a very nice 11 that was 6 ticks very quickly, 8 ticks, whatever your target was. Now we then had a T89, which is also we had a T1 off the 89, which is an 89 bounce, which actually only delivered 3 to 4 ticks pardon me, and you would have been stopped on that particular trade. You would have been stopped out unless you were very quick. Now this is where you have a T11. You've got a higher point, a higher low, but it's bouncing off the 89. Your stop, if you had have entered up here, also would have been 16 ticks. So you stand aside those particular trades. Excuse me. We then had a divergence trade. Bang, and away we go. So let's scroll along here because there's something I would like to point out. It's getting on Sunday night, late Sunday night in the USA. A lot of the day traders, those taking advantage of the Sunday afternoon market, are retiring. This is 2 hours of action here. So here you would have done very nicely. That was a nice T1 with the trend. You would have been stopped on this particular trade. Okay, here on this one, I'm certain you're actually still okay on that one. That was a high of 1350 high. Yep, so you were still, if you took that short, you were still in that. That went up, ticked up 1 tick above. Remember, where's our stop sit? 2 ticks above our closest swing high or swing low, and away it went. So if you didn't take that trade because you're waiting for a breakout or waiting a while, that's 2 hours between there and there. So you can see what I mean about the timing. There you had a T69. Down here we had another T89. Notice how our zero leg is separated from the channel and our entry was on this candle here, and that was a fantastic 8-tick move, 2 points, $100. Up it went. Then you had another T1. Your entry was not till this candle. Your stop is above there. Bang. Now just on those 2 trades alone, you've hit your target of $200 a day per contract. So you might have wrapped things up and gone to bed at last. Down here we had a nice little divergence trade. When I love divergence trades when I'm also getting a zero line cross on my platinum. So you can see here it is a counter trend trade. We've had a nice T1 there, coming back down again, a nice winner. Here we've got divergence on our platinum, and bang, up it goes. And just a couple more. We had a nice 89 bounce, a couple of 89 bounces here. Now this particular one I've marked up because it's a T11 trade. T11 of course is where we have a plot of a higher low in this particular case, or a lower high. So you can see our paint candle, our entry would have been there. You would have been probably stopped on this trade. It delivered about 4 ticks. If that's what your target was, well, you would have been okay, but if not, your stop would have been 2 ticks down below here, and your next T11 was this particular candle, and whoops, there it is. There you're in there. That delivered 6 ticks. Now a T11 once again is where you get your paint bars, your T1s that are higher, so it's forming a general change in direction. Then up here we had a T89. Why T89? Our price action is separated from the zero lag. We're well above the 21 EMA channel, and bang, away it goes. Well, this is our market recap. We went on and had a lot of other great trades for the evening. Once again, please subscribe to my YouTube channel. Any questions, my email address is there. Please feel to drop me any questions on these. And just in finally wrapping up, what I'd like to say is this: you know, the old rule of a wise trader was to buy the pullbacks and sell the rallies. That's what the T1 allows you to do if you're trading with the trend. In many ways, when I do the recaps here for my clients, and I've got hundreds of my clients who now receive my daily recaps that I email out to them, is that in some ways I'm very hesitant in doing the recaps where I point out all the other trades besides the T1s and the T89s, except I deal with a lot of professional traders that have got the experience. So getting back, I'll continue to drum it into you. Stick with the T1s until you're earning your 200 a day per contract at a maximum risk of 2%. That is, focus like a laser beam. And if you look at Mark Douglas in his book The Disciplined Trader, he talks about this extensively. Master one mechanical setup before you move on to anything else. The T1 with trend. Once again, you have the paint bar plot in direction of the 89 EMA. It's not, trading is not rocket science. It's about discipline. 90% discipline, 5% money management, and 5% the strategy. Signing off, this is Samurai Trader, and I look forward to you watching my next market recap, which I'm about to do, by the way, on the European market last night. Thank you.